Good morning and welcome to the Killik market update. We've seen a bit of weakness in global markets this week, and that's due to an announcement from the US saying they'll be raising tariffs on a number of Chinese imports. Now, back in September, the US imposed tariffs of 10% on about $200 billion worth of Chinese imports, and at the time the US said that in March of this year they would be raising those tariffs from 10% to 25%. However, March came and went with no increase in tariffs, and investors assumed this was because progress was being made in the trade negotiations between the US and China. So it came as quite a surprise this week when all of a sudden Trump said that these tariffs would now be going up to 25%. It's all the more surprising because we're not really sure what the exact reason for this is. Trump has implied that China has somehow broken the rules regarding the trade negotiation, and he did issue this tweet yesterday implying that China is perhaps hoping that a Democrat government will get in during the next elections and they'll be able to get a better trade deal for themselves. However, Trump has since said that he has received a beautiful letter from the president of China and that the two will be having a phone conversation next week. And Trump does still seem to be quite positive that some sort of trade deal will be reached between the US and China. So at the moment we are waiting for further news, but for the time being you can see that markets have come off a little bit. So here's the chart of the S&P over the last year, and you can see it has come down just a little bit over the last week following the news about these increased tariffs on Chinese imports. Now, over the last couple of months, there has been an increasing amount of focus on climate change and carbon emissions. First of all, we had the protests in London from the activist group Extinction Rebellion, and following that, we had MPs passing a motion in the House of Commons declaring a climate emergency. And over the last couple of weeks, we've had a number of different organisations declaring that they have set targets to make themselves completely carbon neutral. And here's a couple of examples of organisations or companies that have done this over the last week. First off, we have the German company Bosch, which has said it will become carbon neutral by the year 2020. Verizon, the major American telecommunications company, has said it will become carbon neutral by the year 2035. And the New Zealand government has said that the entire country will become carbon neutral by the year 2050. Now, how do you become carbon neutral? Well, there are a number of different things you can do, starting with things like carpooling or flying less in order to reduce carbon emissions, things like planting more trees in order to offset carbon emissions, and the major one at the moment is trying to switch your focus towards renewable energy. Now, the UK is actually doing fairly well here at the moment, and in fact, the last week was the first week in over 100 years in which no electricity in the UK's power grid was generated from coal. So have a look at this chart showing where our electricity came from during the last week. So as you can see, nothing came from coal. Quite a lot came from natural gas, which, yes, is a fossil fuel, but it has a much cleaner burn than either coal or oil. But actually, we are doing quite well in renewables. So 10.7% of our power came from wind and 5% came from solar. So we're doing fairly well, but there is still quite a significant way to go in terms of increasing our dependence on renewable energy. So that's definitely a space that we're watching quite closely at the moment. And finally, we're always looking at interesting applications of technology to different companies and seeing how companies use this in order to increase their own efficiency. And we've seen quite an interesting example this week from Nike. Now, we know that as more sales move online, retailers are experiencing increasing problems with the number of returns that they have. So at the moment, about 30% of goods ordered online are returned, and this is very costly for retailers because us customers expect to have free delivery and free returns. And this week, Nike announced they've developed a new initiative called Nike Fit, which will be released in summer. And how this works is when a customer orders some shoes on the Nike app, the app will then allow the customer to scan their own feet using their phone, and the app will then tell them exactly what size of shoe they should be ordering for each particular model. And Nike is very much hoping that this will increase the success of online deliveries and therefore reduce the number of returns that the company has to deal with. So this is just one interesting way in which companies are using technology to make themselves more efficient. Now, moving on to the week ahead, still looking fairly busy on the calendar. A fairly big week for big Chinese stocks, so we've got results out from Tencent and Alibaba, and we're also looking ahead to results from National Grid and Eon. That's it from us. Have a great weekend, and we'll see you next Friday.